Hello guys, good evening. You're welcome back to today's session. Please drop a comment if you can hear me clearly. If you can hear me perfectly, drop a comment so that we can start immediately. Kindly drop a comment if you can hear me correctly, and let's get started immediately. Alright, good evening guys. You're welcome back to today's boot camp, which is day two of our 1 week boot camp. And I gave you guys an assignment yesterday. Only few people submitted. However, that is not going to delay us, or that is not going to stop us from proceeding to our next topic. So yesterday we discussed about the introduction to synthetic indices. We also discussed about introduction to market structure. So today we are just going to finish up market structure and we are good to go for today. So if you are new to this bootcamp series, I am Synthetic Goddess and I am going to be your instructor for today on this bootcamp. And if you are new, do not forget to subscribe to this channel. Also share this link to your friends to also join and also learn from whatever we are talking about on synthetic indices here. So yesterday I made a background explanation about what we call change of character. I explained the basics of market structure and I explained what we call change of character. Now you might be wondering what exactly is change of character. I'm going to go over it right now, make the explanation, tell you how you can get to trade them and how you can use it as an extra confluence. So when we talk about market trending, that is still the topic we were yesterday. When we talk about market trending, it's about market moving in a specific direction. So if we say it is moving to the upside, it means that is an uptrend. So we are moving to the upside. Market is going higher. Now, if we have these lows, we have higher high, higher low, higher high, higher low, higher highs and higher lows. That is the representation of an uptrend. We are always expecting that market would protect the lows. Remember, that was what we said yesterday. Market is expected to protect the lows in an uptrend, and it is expected to protect the highs in a downtrend. Now, when we have a violation of the protected high or the protected low, what does that signify to us? That is a change of character. We call it change of character. We use the acronym as this. This is a change of character. Now, I asked the question yesterday that when we have a change of character, does it necessarily mean that market is about to move to the downside? Now, the answer is no. Because in most cases, we are going to have a change of character and market is still going to make a continuation to the upside. So when we have a change of character, what it means is that at that particular point in time, market is exhausted. It means at that specific time, market is exhausted. That is, the buyers are exhausted. And you cannot tell for sure if we are going to have more buyers in the market that will push that movement to the upside. And that is why it is very important that when we have a change of character, you are not jumping to look for a sell continuation. That is not your motive. What you are expecting, or what should be fixed in your mind, is the fact that at that specific point, buyers are exhausted, and it requires somebody or a large equity for us to continue to the upside. So always take note of this, that when we have a change of character, it is very possible for buyers to also regain their power, and it is also very possible for sellers to collect that power. And that is why I would tell you that when we have a change of character, we are in a confused state. When we have a change of character, it means we are in a confused state. Number one, you are not so sure if market is going to continue the buy, or it is going to change totally. So when we have that change of character, it is not giving you any signal yet. In fact, it is not telling you to do anything yet. However, if you see this change of character on higher time frame, you can definitely get your continuation on lower time frame. That is still fixed. However, when a change of character happens, you know that there are two things that are involved. It is either the buyers or sellers, in whatever the trend is, it is either they take over the market again, or we have that continuation to the downside. So we fixed this point to the fact that when we have a change of character, market is telling us that we are in a confused state, and you can't tell for sure what market is currently doing. Now, how do you get the real change of character and the fake change of character? I've noticed this about a lot of traders. You get confused easily with these things, and you fix your mind on what you know. You are not open to learning more about what the market is doing. You are not open to continue your learning in the market. You are just fixed on what you have in your head. Now, we have difference between fake change of character and real change of character. Now, for me, if my change of character happens at a specific area, I'll consider that as a real change of character. I would consider that as a real change of character. If you can still hear me, drop a fire emoji in the comments. I really need to be sure that you can hear me clearly and you are following clearly. So we have difference between real change of character and fake change of character. For your real change of character, it always happens at an untested point of interest. Either an untested point of interest or a liquidity void area. You know those areas that always drive markets to come back, and when markets fills them up, it gives us a change of character that we want to continue to the downside. Now, your fake change of character will happen possibly when we get to a fair value gap that has not been tested. That is when your fake change of character happens. When market gets to a point, okay, probably your fair value gap that has not been tested, but it is not relying on any point of interest. You just see a change of character in the market. That is a fake change of character. It is not real. It is not real. That is a fake change of character. And when we have that fake change of character, it is just telling you to hold your peace. Just keep calm and see what exactly market is about to do at that particular point. But if you mark out a solid area of interest, especially points of interest that you mark out on your higher time frame, and you see this change of character, it means market is reacting at that point of interest. And since market is reacting at that point of interest, by giving us a change of character, we can have that movement to the downside or to the upside, in whatever the case may be. So I'm going to show you this on chart before I proceed to the next one I am going to tell you guys. So let's just check this on chart. So let me just pick a random asset. You can drop an asset you want us to look at that concept on. So let's see. Let's see where we have that change of character. Let's see a change of character. Now, take note of this. We had a push to the downside. We had a retracement, a push to the downside. Now, normally we are not expected to go above this high. We are not expected to go above this high. But what did the market do? We went above it. Let me delete this so that I can show you guys what I mean. We went above it, showcasing to us that this is a change of character. This is a change of character. Now, is there any area where this low is reacting from? We cannot see past result from here. But I want you to look at this. I want you to look at what market is currently doing here. Let's go to our 8 hours time frame. I need to show you something. So this is our 8 hours time frame. All right. Now we had this break of structure to the downside. We had this break of structure to the downside. This is a change of character to the upside. Now you need to look at this. Market did not react. This particular move to the downside, we did not react at a solid point of interest. We did not react at a solid point of interest. If there is any point of interest market we use, now don't get confused if you do not understand point of interest. Just follow me. We are still going to get to all of that. Okay? Now, if there's any area market is supposed to use for this sell continuation, it should be relying on a good area. It should be relying on a good area. Either this low, from this low to this high, is a good point of interest. If you are confused about point of interest also, and you are an intermediate trader, you can check on my channel. I have a lot of videos about points of interest. So this point of interest where market currently reacted from is not a good point of interest, coupled with the fact that this high is a weak high. Let's not talk about that. I don't want to get you confused. But where this sell is supposed to react from was not where it reacted from. So when market came above this high, we cannot be so short. Also, you need to see hidden fair value gap here. I have what I call hidden fair value gap. You can see that all of these places, in as much as it was tested with wicks, it is still showcasing a void. It is still showcasing a fair value gap, that is, market has not tested it. So when market came as high as this and started reacting to it, at this junction, personally, I am going to just want to stay off, because I can't be so sure if market is going to continue the buy or not. That is why I said we are always in a confused state when market gives us change of character, especially when we can't see where that movement is reacting from. So you can see that we had this push to the downside and we swept this low. It was not a real break. We swept this low. We swept this low and market pushed to the upside again. We had a break to the upside. Here we now had a break to the upside. Now let's see where this push to the downside came from. This push to the downside, where did it come from? It came from a good area, actually. It came from a very good area. And you can see that we had change of character here. This is our change of character to the downside. And technically, what you are expecting is that market is going to continue the sell movement, to continue this low. But there's something that you are missing out. The current trend here is still to the upside. The current trend is still to the upside, in as much as we had a change of character. The current trend is still to the upside because we broke a major high. Market broke a major high. When we talk about major high or a strong high, we are talking about a high that manipulated a previous high, or a low that manipulated a previous low. So we had it broken and market pushed to the upside. We came back and had a change of character here. As much as where market reacted to here is a good area of interest, and you can see that it was still that area market used for a continuation to the upside. But market came back here to clear some liquidity and still gave us a push to the upside. And that was why I told you that when it comes to trading the market, it is based on calculation and it is based on you having a great psychology. Personally, also, I would have started looking for a sell around there. Why? Because where market is reacting to is a solid area. However, you can see that markets just keep moving in the normal direction it wants to go. So we had a change of character here. Market came back, broke this high before we came back to have our proper break of structure. Before we came back to have the proper break of structure. So in essence, what I am saying about change of character is to the fact that when you see a change of character, don't be so quick to judge with that little change of character. Don't be so quick to judge it, except of course if the change of character is a strong high or a strong low, just like we marked out here. We will talk about strong highs and strong lows, do not worry. So unless it is a strong high or strong low, that is when you can start saying I want to look for my sell continuation. But if it is just this minor change of characters, you should not get yourself overworked on it. Market seeks to put us in the state of confusion by giving us change of character. But after the change of character happens, now this is it. When the change of character happens, when we have something like this, let's say to the upside, and the change of character happens, and we have something like this. We took this first low, take this second low. You can start saying we are trending to the downside. Market is changing its trend. But when market gives you this first change of character, do not stress yourself about it. Most often, it is a fake out. I hope we are together on that. Now, that is that for change of character. So, what we are establishing here is to the fact that when market is trending to the upside or to the downside, don't be too quick to judge the new movement by a change of character. Your new movement should not be judged by a mere change of character. Sometimes it is just to put you in a state of confusion. So that is that for change of character. So let's move to what we call the ranging market before we talk about the rules of market structure, that if you follow them, if you follow the rules, I don't think you should make a mistake about market structure again. We have what we call ranging markets. Remember that we discussed about trending markets just yesterday. We have what we call ranging markets. And in a ranging market, it is just market moving sideways. Market is just moving sideways. It is not going up and it is not coming down. It is just moving in a particular direction. It is just in between a particular number on the high and a particular number on the low. That is what a ranging market is. And when we have this ranging market, do not get yourself stressed up on it. If it is on higher time frame, you will definitely get your entries. You will get those scalping entries. But you need to fixate your mind that this is just a ranging market on the higher time frame. And whatever trade you are taking in between is 50-50. You can't be so sure on it. So you don't fix your mind to the fact that, oh, this market must buy or this market must sell. In a ranging market, whatever it gives you is a 50-50 chance. And sometimes that is why it is very okay to stay off ranging market and focus on other assets. So let's see if we can see some ranging market here. There was a ranging trend. There was a ranging market rather that happened on volatility 25, and it happened for a very long time. Let's see volatility 25 and if we can still access the previous information. Okay, we cannot access so much of it, but let's use what we have right now. You can see that market was just moving in between this low and this high, and it happened for a very long time. This was in May, and we broke out in December. It started from May and we broke out in December. All this is just sideways market. Market is just moving sideways, right? That is what we call ranging markets. And when you are joining the market, ensure that it is just for scalp, because you don't know the normal direction of the market. Compare this range to this move. You can see there is difference. This one is trending. This one is range. That is what we call the trending market. So let's go to the rules of market structure that you need to use, and you would not have problems with your market structure again. So before I go to the rules, now let's talk about time frame. Time frame is very important, and I reminded myself that I do not want to forget this. When we talk about time frames for market structure, it is very important that you look at your time frame and you know the time frame you are marking your structure, in whatever you do, if you want to mark out a clean structure and you want to know the exact structure that you are marking out, ensure that you do not go lower than 8 hours time frame. In fact, I would say do not go lower than 24 hours time frame. If you truly know deep down that it is structure that you want to mark and not noise in the market, I would advise that you don't go lower than 24 hours time frame, because lower time frame has a lot of structure on its own. We have different type of structures, and I don't want to confuse your mind with them. Hence why I am going to be giving you just rules. Now, we have different type of structures, and it is on lower time frame you will be able to identify those structures. On higher time frame, you will see clean structure. You will see exactly what the market is doing. Just like this, we had real movements to the upside. We had higher high, higher low, higher high, higher low, higher high, little higher low. This is clean. This is perfect, and it is very visible for you to see that this is the structure we are currently trending in. But on lower time frame, it is very easy to get lost and confused. So when you are marking your market structure, the higher the time frame, the more clarity it gives you. The lower the time frame, the more noise and confusion you get. So if there's anything that you are going to take home from this market structure, in fact, it should be time frame. Give yourself the rule that you are not going lower than this particular time frame, and don't go lower than it. I can attest to it that you are going to see a lot of changes in your trading life, especially if you are an intermediate trader. Ensure to work with higher time frame, 24 hours time frame, weekly time frame. So let's go to the rules of market structure. The number one rule of market structure is that you need to identify the order flow. Identify the order flow. That is the first rule of market structure. What do we mean by order flow? You can see that this movement, even without saying anything, even a blind can see this, that we are going up. We are moving to the upside. And so, whatever sell you are entering on this market, you are sure that it is a retracement. I'll repeat that again. Whatever sell that you are entering on this market, you can be sure that it is a retracement, because the order flow has proven to us that we are moving to the upside. The second rule of market structure: identify the last break of structure. Always identify the last break of structure. If you are coming to the chart and you are coming to make analysis for the first time, or you are coming to just make the analysis, you are coming to build up your setup, your first thing you want to do after identifying the order flow is identifying the market structure, the current structure of the market, the last break of structure. Now, what do we mean by the last break of structure? I want you to look at this thing, and I want you to look at it carefully. Our last break of structure, based on this 24 hours time frame, is to the upside. See, this is to the upside. Now, this is what this is going to give you. Since this is to the upside, where is our last, or where is our low, our last lower low? The lowest low. Where can we find it? This is the lowest low before that break of structure. This is the lowest low that happened before that break of structure. So what this means is that you are trading from this high, from this low to this high. Now let me tell you what that means. It simply means that market can come as low as this. Market can come as low as this, and you are not changing your mind that we are still in an uptrend. And you know deep down in you that whatever move is happening here is a retracement. Even on lower time frame, if you are entering the sell from here until market breaks this low, you are rest assured that our last break of structure is still to the upside. Now, a lot of people would mark this out on lower time frame. I would love to show you something and why it is essential for you to work with higher time frame. For most people, when I say mark out the last break of structure, this is where they will mark out. This is where they will mark out. It is not wrong. Marking this place out is not wrong as your last break of structure. But does it necessarily mean that after market breaks this low, we've changed structure completely? The funny thing is market can break this low and still continue to the upside. And another funny thing is that we can break this low, but you are classifying it as a change of character, meaning that when a change of character happens or when market breaks any low or any high, it has an area it is targeting to go to. So meaning we can come as low as this and we will still continue to the upside, and you are not surprised about it. Guys, are we together? Are you learning something? Drop a fire emoji, drop a comment. Let me know if you're still learning something. So, just like I said, market can break this low and come back to this area and still continue movements to the upside. And you will not be shocked. You will not be shocked that there is another movement to the upside. Okay? So that is why it is very necessary for you to pick out your last break of structure. In whatever you do, always mark out your last break of structure on 24 hours time frame. Even if you will mark out your break of structure on lower time frame, ensure you are getting a clear direction from the 24 hours time frame first. So I have made mention of two rules when it comes to market structure, and I can beat my chest to it that when you get these rules correctly, you will not have issues with market structure again. And the funny thing is that one of the things that traders struggle with is entries, which we are still going to talk about. So when it comes to market structure, you won't have any issue again once you are able to abide by the rules. So number one, I made mention of the fact that you need to understand the order flow. Number two, you need to mark out the break of structure, the last break of structure. That is what will make you know the range you are trading in. Then number three, for every retracement that happens in the market, it has to be a deep retracement. For you to classify something as a retracement in market structure, it has to be a deep retracement. What do I mean by deep retracement? Follow me closely. When we have a break of structure to the upside, this is normal market structure. Is that correct? This is normal market structure. Now, if market gives us something like this and a break of structure to the upside, this is not a deep retracement, and the market structure circle is yet to be completed. If it is something like this you are seeing in the market as a retracement, the market circle is yet to be completed, especially when you have void or fair value gap below. When you have void and fair value gap below and market creates this low, market just gives you this small retracement, I can assure you that the market circle is yet to be completed. Now, what is the market circle of market structure? Number one, we have to have a break of structure, and after every break of structure there must be a good retracement. Then we need to have a continuation. That is the complete market circle of market structure. But when you have a break of structure and market just gives you this movement, just this small movement to the downside, and there is a fair value gap or a liquidity void below, be rest assured that the circle is yet to be completed, and we can have something like this. Is that okay? So this retracement is not a deep retracement. So for your market structure circle to be completed, we need a deep retracement. That is the third rule of trading of market structure. That is the third rule of market structure. When we are having a retracement, it has to be a deep retracement, and it has to be a deep retracement. Okay, now see what we have here. Let's overlook last break of structure from daily time frame. This is a break of structure to the upside. Notice how the void happened here. This retracement was not a good retracement. It was not a deep retracement. So it is still very, very possible for us to have something like this and continue, because we have void. This low is yet to give us a good retracement. We have void. We have what we call liquidity void. So it is possible for market to come back here. In fact, when market is coming back here, we might have some reaction. In as much as it might not continue that high, we will have some reaction from this liquidity void. Okay, so this is still our last break of structure, because this was where we had our last retracement, our last deep retracement. This was where we had it. Okay, this was where we had the last deep retracement. So this movement to the upside, all of this, we are not counting it as a real structure yet. We are not counting it as a real structure yet, because there is still a circle that is yet to be completed here. Market is yet to complete a circle here. So all these ones it is doing above it is still not giving us what we want until this circle is completed. So where we have our last break of structure based on this range is now to the upside here. Do you understand? It is now to the upside. So we are expecting market to come back here to complete the circle. Now these are the three circles that I look forward to, or three rules that I follow when it comes to my market structure. I can tell you for free that when you follow these rules of market structure, I can assure you that you will not have issues with market structure again. Market structure is not going to be your issue again. Let me recap. Number one, you have to know the current order flow of the market. And once you know the order flow of the market, it automatically means that whatever sell or whatever buy, if the order flow is buy, if the order flow is bullish, whatever bearish move, you can be rest assured that it is currently a retracement. Secondly, you have to, for every area you want to mark out your structure, you have to mark out your last break of structure. That is what is going to help you in identifying the range you are trading. Then number three, for the market structure circle to be completed, We need a deep retracement. Now, you might be asking that how do you recognize what we call break of structure? How do you recognize it? Your break of structure should be recognized with a body candle close, not a weak candle. Let's delete this. When market took this high to the upside, you can see that it was just with a wick. It was just with a what? A wick. You must not classify this as your break of structure. It is not your break of structure. We call it sweep. In most cases, market just sweeps it and it will not break it. But when we have a body close outside our previous high or outside our previous low, that is what we call break of structure. You can see that we had impulsive movements to break this previous high. Now this is break of structure. There was a body close candle after it and not a wick. This is a wick, this is a body. Let's look at that somewhere else. (24 hours time frame). I want to show you guys wick close candles. Good. Now when this high was broken, it was with a wick. It was just with a wick, not with a body candle. And when wick like this happens, sometimes market will come as low as taking this low and still continue to the upside. Let me mark this again. Now when this candle closed, it was with a wick. It was just with a wick. That is not a break of structure for us yet, until a body candle closes after it. That is when you know your true break of structure. So I have explained change of character, I have explained break of structure, I have explained the rules of break of structure, and I have explained sweep. The simpler you keep it, the more edge you have in the market. If it is too basic, then you are thinking you need more complicated stuff to win in the market, and it is not like that. If you can turn those little basic and you are disciplined with it, I can assure you that you have a great edge in the market. Go and back test this market structure rules that I have given you. Mark it out. You can send it to me during the course of this bootcamp, and I am going to respond to you if you are missing anything out on it. But go and back test these 3 rules that I have given you about market structure. If it doesn't work, you can stop attending this bootcamp. If it does not work, stop attending this bootcamp. I am very sure I know what I am saying so well because I have practiced it in the market. Keep it so simple keep it simple and stupid. Keep it simple that people would wonder how simple it is for you. I have heard a lot of people say the way I mark out my structure is so simple, the way I mark out my chart is so simple. That is because I keep my analysis minimal and simple. So just go and backtest these things about market structure. Give me feedback. I'm going to be waiting for your feedback. So if you have any question, drop it in the comments and I am going to answer your questions. So let's take questions for now, guys. Let's take questions, guys. I am waiting for your questions. All right, are there backtesting softwares for synthetics? Currently, no. We do not have backtesting software. Can't wait to get to the challenging part. Beautiful. You're more than welcome. Alright guys, if there are no questions, it means you understand this so far, and I am really glad about it. So okay, somebody dropped one. Is it all the retracement that does a full retracement? Because there are times when it just retraces a little bit and it might not even get back to the region where they. Alright, now for this retracement part, number one, remember I made mention that especially when you have fair value gap or liquidity void below it, that is when you are expecting market to come back there. In some cases it won't happen like that. And another thing I want to tell you is that all these strategies that we are building up is based on what we've seen in the market, the past incidents we've seen in the market. Market can choose to use any of it. Market can choose to do whatever it wants. Sometimes it won't even come back as a good retracement. It will just start jumping. It will jump so high that you would wonder where it is going to. But for what has worked in the market so far, which I have seen 60 to 70% of the time, is the fact that most of that retracements, those small retracements, market will come back, rate them off and give us deep retracements. Do you understand? All right, for the assignment, I am going to open the group, the community group, and I am going to open it for you to drop your assignments there. Then how do you backtest? You are going to look at what market has done previously and relate it with what you are currently doing. Like yesterday, I told you guys that you cannot replay on the Reef Trading View. You have to just do it in the traditional way by going back in time and focusing on it. That time you are not trying to trade in the market. You are not trying to trade in the market, okay? You are just trying to see what the market is doing, okay? So I understand everything so far. You can send me a message on my Telegram. My Telegram link is in my Telegram channel. Can we use this market structure to get POI and entry? Yes, you can use the market structure to get POI and entry. With the amount of knowledge you are giving us in your Saturday live analysis and this bootcamp, is there anything more I need to learn from you from the paid mentorship? Just as the name implies, there are a lot of things that you will learn from my paid mentorship. That's the fact. If I can give out this for free, how much more the paid mentorship? You are going to be mentored properly as regards whatever it is I am teaching you. Secondly, I am going to teach you more in depth about the market, and I am going to show you more in depth on the market. So there are a lot of things you can learn as regards that aspect. Still talking about the retracement. Okay, I'm still waiting for your questions, guys. If you do not have any question again, drop me a comment in the comment sections. Give me my flower, guys. Give me my flower. Let me see you give me my flower in the comment section. And you do not want to miss tomorrow class, of course. You do not want to miss it because it is just starting to get interesting. You do not want to miss tomorrow class. So I'm going to be waiting for you tomorrow by 6 p.m. on this YouTube channel. Invite your friends, invite everyone that you can invite. Also, please guys, click on the like button. Ensure you like this particular live session. Like it, make a comment so that we can reach more people. So how do we get the right POI? How much for mentorship? You can send a DM to my admin. You can send a DM to me to find out about everything about my mentorship or my services. Okay, how do we get the right POI? We've not gotten to that POI yet. Okay, we've not gotten to POI yet. We are still going to talk about point of interest and all of that. When there is a minimal retracement and the market breaks another BOS, are we supposed to forget the forgotten retracement and look for another new BOS? And look for another BOS. I'm trying to understand this question you asked, Oluwadamisile. All right, can it be downloaded now? Yes, it can. Does it mean we are not going to get in-depth information in this bootcamp? From everything I have been given so far, I really think this is more in-depth knowledge. Okay? How do we validate a deep retracement? When market gives you at least up to 50%, 50% of the previous range, and it fills all the liquidity void, the fair value gap, that is when you can classify it as a deep retracement. Alright guys, this is going to be all for this evening. I'm going to see you guys tomorrow by 6 p.m. on this YouTube channel. Have an amazing week, guys. Have an amazing night. Alright, bye guys.
Yeah, the end there.